Hey guys, welcome back to the channel. Today I'm going to be providing a market update for Bitcoin. We have seen a capitulation occur over the last 24 hours with Bitcoin making lower lows, currently around $15,500. So in today's video, I do want to take a pragmatic approach and look at the markets just on some support and resistance levels, as well as some indicators, especially considering how much emotion and fear there is in the markets, whether that's because of certain altcoins that have crashed or because of the news surrounding FTX, or whatever it may be. I want to take the emotions out of the analysis and just look at some concrete levels for Bitcoin, as well as the total asset class, looking at total one. So if you guys enjoy the content, make sure to leave a like and subscribe. So first, I do want to start off by talking about some support levels down from here. And what I'm going to be watching out for first is going to be this level around $14,000. Now, this corresponds to the 2019 all-time high. This was a level in which Bitcoin had this big rejection off of after this impressive rally from those bear market lows up around 4x right into that region. And then you can see from that level, the breakout point in October of 2020, this is where Bitcoin really started to kick up the pace of this bull market. This is when the rate of change of that move up really started to pick up. We had a huge breakout from this level right up to the next level around $20,000, which was the previous market cycle's all-time high. So now that we've lost that level as support, that level around 20K back from the previous cycle, this is the next longer-term region I will be watching out for. Now beyond that, I also do want to talk about how this level is very important on the monthly chart. So I'm going to switch over the time frame here to a monthly chart. And this was also a level in which the candle close of the last cycle rejected off of, with the wick going all the way up to that $20,000 all-time high, but the candle body coming back down for the close, the monthly close, again around $14,000. And then you can see that rejection, that resistance pretty cleanly on the monthly chart as well in that 2019 rally up to that region. So for Bitcoin to get all the way back down to that region, that would entail about another 10% drop, which certainly isn't out of the question, especially considering how Bitcoin is down around 15% today. So I would definitely consider this as a realistic target. And with that being said, I am very interested in this region. I'm very interested in accumulating and setting some bids at the $14,000 level, just based on how important and strong this level is on the monthly as well as the weekly. So I do want to switch back over to the weekly time frame and talk about now some indicators that could suggest this might be a pretty decent opportunity to accumulate. So I do want to pull up the RSI, which is the relative strength index. And with this, I want to focus on the fact that we do have some pretty intense bullish divergence playing out here. So bullish divergence is basically when the closing price of the asset is declining, such as Bitcoin has been since this low right here in June. Meanwhile, the RSI, the momentum oscillator, is in an uptrend, forming higher lows. So you can see that quite clearly on the chart, but I will start to draw these out here so that you can see how, again, that closing price has been in a decline since that low that we formed back here in June. Meanwhile, the RSI has been rising. Okay, so we have that divergence playing out. The RSI back here in June formed a low of around 26. And although the weekly candle close has a long ways to go before actually confirming this, the current price of the RSI is around 30. So we are definitely having that play out in the short term with the RSI making that higher low. Although it is unconfirmed, definitely watch out for this to play out into the next few days as we do get the weekly close, especially if Bitcoin does close below that price that we had back here in June, that weekly closing price of around $19,500. And at the current stage, it really does look likely that we will start to see that bullish divergence play out. And for those wondering why this matters, bullish divergence is a great indicator and sign that the momentum is starting to slow down. And although it might not feel like it has been slowing down in the short term, do consider that we had these pretty huge declines. Again, this move from March, taking us from around $47,000, $48,000, all the way down to a level around $17,000 in just a span of a few months. So yes, it's a pretty significant move and a pretty significant decline, but it is nowhere near comparison to the last leg down that we had. And that's really what this is showing us, is that yes, the relative strength is pretty weak, but it is stronger than it was back here on the capitulation. There is some momentum starting to slow down. And if we just look at this, the RSI has actually been in a longer term downtrend decline since January 2021. And we've had a pretty consistent retest of that with this lower high again in November of 2021 on that all-time high, and then just the last week coming up to this level. So this could be something that we could watch for Bitcoin to start closing back above this and breaking that longer-term RSI downtrend if we do come back above this region. Now that could happen if we do get some sort of dead cat bounce back up to this 18-20K region. I certainly wouldn't discount that. It's definitely something that is within the cards, and it's going to be something I'm watching out for playing out into the next few months. Now that is much further out, but that is something I really wanted to mention because this longer term decline on the RSI has been so consistent and so clean. And I think that when we do eventually break this, that's going to be another huge sign for Bitcoin that we might be starting to enter the later stages of the bear market and maybe the new stages of a consolidating environment leading into another bull run. So I also do want to talk about how the volume is really starting to show some signs and indicators of a huge capitulation. So I want to switch over here to the daily time frame and turn on the volume right here and then close out the RSI. So with the volume, what we're looking at here is this massive spike. Basically, the volume, this daily candle, is at a huge increase over the last few days, in which we're seeing a lot of capitulation, a lot of forced selling, a lot of people starting to fold their Bitcoin holdings. And this volume is really telling this is a higher level of volume than we saw back here on the June capitulation, as well as if I zoom out here, as well as the May capitulation. So this is the highest volume candle on the daily chart that we have seen since this move right here in May of 2021. And I would argue that they are similar levels. We haven't had the daily candle close yet. So watching out for the volume, it is and has been a huge telling sign of a longer term bottom, where going out here even to the previous cycles, again, when we did have that massive volume spike time and time again, you can see how that has corresponded to some pretty significant milestones throughout Bitcoin's history. Going back to this 2018 bottom, we had a huge capitulation on volume. You can also see right here in March of 2020, we had that other huge spike up in volume. This was a huge capitulation in which we saw Bitcoin crash about 50% in just 24 hours. And then again, in that move right here in May of 2021, we saw the volume spike as well. And we are seeing that volume spike for the third time during this bear market. The first time being May, the next one being in June, and now this last move right here. So lastly, I do want to talk about the total cryptocurrency asset class. I'm going to be looking at the weekly. Similar to Bitcoin, this total asset class has come up to these two moving averages, the 20 SMA and the 21 EMA, rejected off of that, and now we're starting to break below support. So with the total asset class, we were in this previous range of support from 830 billion all the way up to 1.15 trillion. You can see that was support throughout June as well as October, and then the resistance at 1.15 trillion in August at that lower high being previous support throughout 2021. So as our next support, the next level I will be watching out for is going to be the 300-week simple moving average. Today that is coming in around $685 billion. And if I were to zoom out here all the way, you can see that in March of 2020, we did retest the 300-week simple moving average. It did act as support, and we had a pretty significant bounce off this region. And you can see that, we're getting pretty close to that region, similar to how Bitcoin is getting close to that $14,000 area of support. The total asset class is about 8% above this longer term moving average, which also corresponds to the previous all-time high back in the last cycle. This one forming in January of 2018. Again, this is the total cryptocurrency asset class, so it does include the altcoins, which primarily peaked in January after Bitcoin peaked. You can see that has some confluence with this moving average, and I would consider this to be also a huge level of support and an area of interest for the longer term cycles. So I hope you guys did enjoy the content and the analysis. By the way, I have a Twitter page. I'll leave a link to that in the description below. I'm fairly active over there if you want to go ahead and check that out. As always, I hope you guys enjoyed, and I'll see you in the next one.